Hello and welcome to the Pipnotic Symposium on the 7th of September 2018. I apologize if it's a bit windy. It's pretty windy here today, and we have very few walls in the house, and so wind is coming through, so that might interfere with the mic, and I apologize for that. Okay, today we're going to have a look at some configuration options with the software, and we are also going to have a look at the pound Swiss franc, which I've seen Brian discuss in the members section, so on the Discord server. Okay, if we start off with the configuration, so there are three main settings that you want to be aware of, and these are those: the risk reward, the price imbalance, and the min percentage. And these are the ones that you want to kind of pay special attention to when you're using the software. So the first one here, risk reward, when it qualifies an area that is, say, 10 pips, it will want price to move away in this number of periods at least 3 times the area, 3 times the size of the area. So on this one here, let's say that this is 10 pips tall. Price will have to move away at least 30 pips from the entry level within 3 periods. So when this candle here closes, price has to have reached a 30 pip move away from the area. And this one here, minimum percentage of range, this is simply telling the software how big these areas need to be. So we want, looking at an average of 13 periods, we want to consider the size of these areas, because if they're tiny, really tiny and small, then you're going to get a whole lot of them. So I like to see ones that are that have a decent size. So it's looking at 13 times, the range of 13 times 4-hour periods, and it wants to see the size of this area to be at least half that. And so these are the ones that are very important. And of course, like, different settings will work better with other kind of currency pairs, but because everything is range based, I think that it's relatively generic, which makes it possible to have these somewhat generic settings for all the currency pairs. I don't fiddle too much with them. I normally leave them on either default settings, or I put 3 to 3. 3 to 3 has been one I've been toying with for a long time, and that was actually a default setting a while back, but I changed it to the more aggressive 3-5, just so that we had the more aggressive one, which is a 3-5, and so it wants it's going to be showing you a lot more areas with this setting than this one here, but the ones that it's showing you are going to be much better qualified. Good. Good. Yeah, we'll give that a shot and see. I mean, the robot is also looking at this information. I'm actually doing the testing, the back testing, using these settings, and I can just show you that very quickly. So if we go to the back tester here, you see we have this robot here, the tester, the BusyBot tester. And so I can say optimize, and I can say expert properties, and I want it to look at where are we? Down here, these settings here. Risk reward multiplier 4 and 6, and it starts at 1. And both of them, it has a step of 1 and it goes up to 10. So it's going to do every possible combination of these settings, and it's going to show me which one is the best one. And so I'm just going to say OK, and I'll pause the video, I'll let it run quickly, and then we'll have a look at the results. Okay, quick update. It identified 100 combinations. Now it's running through those, and now you can see how it's slowly moving. Now we've done 4 iterations out of the 100, 5. If we have a look, you can see the results here so far. So the best profit so far is 77. Drawdown of 37, so really high drawdown. You can see risk reward multiplier is 1. Here we have price imbalance period of 1. So it goes through all different possible combinations. But we'll let it run for a little bit longer, and we'll have a look at the results. Okay, we'll just turn this off now, and you can see we've had a few iterations, and you see the profit here, the iterations that were decent, and we have the drawdown, the number of trades, and so on and so forth. You can see here that risk reward multiplier, I mean, it started at 1, it's gone all the way up to 10 here, iterations of 1. You can see that we have the price imbalance parameter that's also been incremented with each iteration, and of course this is going to give different results. I don't remember what the settings of the robot are, but we're getting some hugely big drawdowns here, so I'm thinking position sizes are probably a little bit big in relation to the count, or we have too many positions open. But the fact is that this is one of the ways that I was able to find a pretty decent generic way for deciding default parameters for the software. But try 3 and 3, see if you like it. If you don't, try and fiddle with the parameters and see if you can get it to do something else. But yeah, I think you should totally experiment with it, because I mean, while there is, for me, I mean, I leave it on 3 to 3, sometimes 5 to 6, depends. But I'm finding that, I mean, that the levels are the same sometimes, and with your manual analysis you'll end up finding the right level anyway. So definitely experiment a little bit with it. Okay, good. Now we are going to have a look at the pound Swiss franc. I'm going to turn off the software. So we have to find these areas. You see it's finding some pretty decent areas for us in its current configuration. It found this one here, which is great, this one here, which is also pretty good, and we have this one here which is tested and it's held, and we have this one here which is a tiny one. Price came down, popped down, accumulated, came up, and then left. I'm going to turn all of these off, so we're forced to do this ourselves. And the question was that if a 15-minute entry would be qualified here. So I'm going to have a look at this, and we're going to talk about why or why not this would be a good trade. Well, first of all, you can see that, yeah, price certainly did leave the area. Let's say this was the area here, and the question was if a 15-minute buy would be validated. And so if you're focusing exclusively on, yeah, price left, we're going to trade the origin of this move, then yes, this would absolutely positively be a really good area to trade, because price did leave. But that's not the only thing that we need to focus on. We have to focus on other things. Okay, and so we're going to mark off the low, then we're going to go to the daily chart. You know what, we're going to go to the weekly chart, or even the monthly chart, and see what's price doing. Is price going higher or lower? And if we focus on bleeding edge, which is going to be from the most recent swing, which is this one here, and right, does this look like a bullish or a bearish market? I think that we could very clearly say, wow, okay, we only want to be selling. Yeah, the interest rate swaps are telling you to buy, but you don't have to only trade in line with these interest rate swaps. You have to keep in mind that the major flows are going to be moving in line with this, but the major flows are the position trades, and they're being held over months and even years. And even then, interest rates are changing on a regular basis, or semi-regular basis as well, a couple times each year generally. And so you have to keep in mind, but I mean, you could see it, wow, we only want to be selling, as you could see here. That said, there are some other things going on that we could focus on, but let's have a look at this and go down one by one to the smaller time frames and see what we can figure out. On the weekly chart, price is moving down pretty quickly, and you can see here that we had okay, I'm gonna do it very quick, and I'm not gonna go too much into detail, but you can see that here we had an area. Price rallied, came up, came down, left, tested, came down, moved sideways, moved down, accumulated, and then went down. So what area of supply took out this demand? And we know this is demand because this is where price came back to. So this is telling us where the edge of the buy zone is. So you go to the 4-hour chart, probably be able to see a little bit more detail as to where that area is. So you can see it's just here. Let's have a look. Yeah, and you can see it's actually, this is the chart. We have a series of children, but this is the area that was interesting. It's been tested, but now this one is gone. And what area did it? Well, it originated from up here, because here we have the high, here we have the turning point. Price turned around, we formed a low, so a high, we moved down, we accumulated, and then we left. This is a great area to sell here, because this was formed after we formed a rally accumulation and a sell-off. So price rallied, accumulated, sold off, accumulated, sold off, accumulated, sold off, price came back and then left. This pullback has pulled back to this one. Okay. And so we wouldn't want to take that one again, but this one still is pullback free. So there's black space from the release point all the way to current price. So this is a very nice place to sell once price comes back. If you're in a long position at the bottom, this would be definitely a very nice place to get out of the trade as a result. So you can see the price is moving down pretty steadily since then. This one is gone. We go to the weekly chart and find out the area that actually did that, caused that that level to be violated. It's up here. So we have it just here. We'll mark off the whole one. So this is what is currently driving price, this weekly area of supply. Price is moving down into this one here. So we can mark off that one like that. So that's what we're currently poking in. So we've just began to test the edge of this weekly area of demand. You can see that we had, let me zoom in a little. So price left, went down, accumulated, went down, we came all the way back, then it kept going down. I mean, this is telling us that there's still like a bias to the downside for the time being until we manage to find the liquidity required to onboard buyers or to get these shorts out of their positions, because a lot of people who are short are looking to get out of these trades, and this is probably a logical place to do it. But if you have a closer look at this, I'm just going to delete this, you can see that we have the whole parent-child relationship thing, and this is, I mean, this price has already been down here, so you can see that price has been down to here. So this is a decent area down here. Price came down, we gapped into it and went up. We haven't really been back there since, so now we're coming back there. But if you look on the daily chart in here, this is a really nice area of demand, and I'll just find that quickly. Okay, here it is. So price came down, it formed this low, it rejected, we accumulated, we went up, we accumulated, we went up, and so price has really managed to move away, and it has not been back here since that. When price goes down and goes up, so this negative price action is cancelled out by this positive. On the higher time frames, this will just be a wick, and so we are looking at the bottom area of the wick, and we actually have a pretty decent area right here that I will totally be all over once price comes down there. You can either wait to price, you can put your order in there to buy, or you can wait for price to come in there and reject on the smaller time frames and then buy at a micro area of demand. But this is a really good area down here. Also price rallied, we accumulated for 2 periods, and then price managed to move away like so. So this is on the hourly chart, as you can see here. This is moving to the smaller time frames to move into the to these daily wicks, weekly wicks, because this is where all the good stuff is. So if we take this information with us and you look at this, and you can see, wow, well, price is actually reacting on something that has already been tested historically. So if we go all the way back and we have a look at it, here it is. I mean, look at this. So price right now, this is the low, the current price. Price came back down there. It's kind of moving around there. This is where we had that big rejection. Our price has come back down to it. Is there demand in here? No, nothing. There's absolutely nothing in here. On the smaller time frames, I tried to look on the 5-minute, but I couldn't see in here. But there's probably something in here, around here, that would be interesting, because price came up, rallied, pulled back, and then left, and it has not been back. But this is below that. So this is a very nice area to start to accumulate long positions on the pound Swiss franc. And so be very careful about buying currently, because price is coming down to the area and it's accumulating, and this looks like it's going to have another push lower. Also, price has been there once, twice. We had a really nice rejection, and then price came back down pretty quickly. Price went up and then it came down pretty quickly. It didn't like kind of drift around for a few days and then come back. It came back, I mean, within a very limited amount of time, and now we're kind of stuck to the area. And what is this white candle stuff? This is liquidity being consumed. So now we are consuming liquidity located at the edge of this daily area, sorry, the weekly area, wasn't it the weekly area? Let's see, yeah, the edge of this weekly area on the higher time frames. You can see where, yeah, this is not, if this is agreement, this is not disagreement. This is disagreement, this is agreement. This does not make me very comfortable buying around this level here. So just be very, very careful. Okay, we're going to grab another pair. So let's have a, let's have a look at the euro. Let's have a look at the euro. What's going on in the euro? If we have a look on the daily chart, what's it doing? We're moving sideways pretty nicely. It's got the weekly where the major flows are. And we're drifting down. We've kind of broken maybe our downward sloping trend line, like so. And so price has kind of rallied. We've reacted on this down here. Actually went down. This is a child. The parent's down here. Like so. This is where price is testing now, and this looks like it was enough to hold price. And so price is currently gnawing away at this here, because there are going to be some micro areas of supply in here, and price is currently nibbling away. You see price went up and went down, but it didn't retreat, kind of hung out in the area. So it's still around there. It didn't kind of go up and then move away. It didn't do something like this, like with an immediate rejection. And so it doesn't look like there's a lot of supply up here. So the fact that we're reacting at weekly demand, there's no supply above price, and you can expect price to potentially wriggle higher from here. You can see we have a downward sloping trend line, which has now been broken. Let's go to the smaller time frames, have a look. You can see that, and we don't really have any super clear supply. We've got some here. We got some here. That's it. We got this here, which is okay, but price has already been trading it around that area. We'll probably get maybe some kind of reaction there. Probably have to go to the small time frames to find those. And here, and this is okay. This is a good area because price went up. We turned around, we formed this top, and then price came down. We saw more supply entering the market, and then price left. So this is a decent area here. We have this around here, which is interesting. They're probably going to have a tough time moving through there. It's very nice, and it's still untested. You can see there's black space from since the candle all the way over to current price. That looks pretty good. So I would totally be keen on getting short at 119.07ish. That's a pretty nice area, and maybe it's a better idea to put your stop kind of above here. Let's have a look inside this to see what's going on the smaller time frame. Okay, so let's go left and look. Got to have a look inside the price there. Okay, so now you can see actually this is not that pretty of an area, because price came down, we accumulated, we went down, we came back, we went down, we came back, and then we finally left. Okay, and so this makes this look less attractive. But this one up here is nicer, I think. This is fresh. This is not fresh because of this. Well, it is new supply, but this moving around here kind of makes me feel a little bit uneasy. But so I'd be totally keen at about 119.60. I really like that area there, and you could probably get away with having your entry at here and your stop 10 or so pips above there. I'll just put it up to the top here, just above. And then you want to find a profit objective. So you go to the higher time frames, and we look where that might be. I mean, there's nothing. If you look on the daily chart, you can see that's just up here, and I mean, there's no demand in here. The demand is going to be at the rightmost edge of price, and so we have nothing yet. We have something down here. Price came down and left, but there's nothing that's forming just yet. This area of supply has been tested once, almost twice. See how price managed to trade just below it for a while, and so I don't think price is going to have a tough time moving through this. This is a decent area, and then we have two just above price here. Keep in mind that price is kind of feeding into this weekly area of demand, which, I mean, the wicks are pretty big on these two, but these are pretty good. How price went up, accumulated, went up, down. Sorry, it went up, sideways, up, down, and then sideways, and then left. This is a pretty strong area in here, so I think we can go like that. We have that. Price came pretty close to it, but it wouldn't. And also, I think you can see how we have a low and a low. So if we attach the histogram here, so look, yeah, I mean, if you go on the daily chart, I mean, what can we see here? We can see some serious currency strength divergence going on. So we have this. Let me disable trend lines, false, so we can actually see very clear. I'm going to fatten these up a bit. See, look at that. What do we have here? We've got this going on. So I be very careful about shorting for the time being because of that. So we have interest in buying the euro, and we've seen the US dollar maybe lose its strength in relation to the euro, and this is what we're seeing very, very clear signs of here. This is where the histogram will really shine for you, because it's going to come in and it's going to show you dwindling divergences in currency strengths, and we could see that it was really looking good here, and it started. I mean, it really kind of evened out here, and now we have less of an interest in selling this pair in relation to this first dip here. So a lot of interest, less interest. So what's this? That means that this. So it's really windy. I can see that it's picking up the wind. So this is not selling. This is price looking for liquidity, looking for buy orders to drive price higher, which we found in this weekly area of demand just below. Cool. Alright, well, I hope I'll wrap this up for now. I can see that this is going to be maybe a kind of a strange recording because of all the wind moving through the house. So I'll wrap this up. But if you have any questions about anything that we've covered, please just shoot them off in the Discord channel. And if you have any other things you want me to cover in the symposiums, please put them in the symposium channel, and I will get to them during the next session. Anyway, thanks so much for watching.